We are live. We are live. Of course, people are at work, so they may not come on soon. Is that we go live, and we just like to give it a few moments before we start talking to allow others to tune in for those who are able to tune in at this time. A lot of people at work are on lunch break, and we are here today going to share some valuable information regarding your loan options, credit, and real estate. So I have Ileana Bird. She's with Guild Mortgage. She's going to discuss her things that she likes to discuss regarding what options they have with Guild. And the camera's up there, so you might want to just stay up there because oftentimes we'll look at this and we'll be looking down and there's no one there. We're looking at ourselves. So I have to say that because every time when I do interviews or when I have people on camera, they'll be looking at the screen versus looking at the actual camera, which is normal. So if you did you get a chance to see where you can share it before we begin?
No, and I've never done this before where I shared live to my face group.
Okay,
so
well,
I'm not gonna go there today.
No, yeah, you just
I can share that after we have our
okay.
conversation.
No problem at all. No problem at
That
all.
way I don't look distracted looking at my
It's
phone.
okay. Anyway, no one's on here yet, so this is basically we're going to go ahead and begin either way, so that way people who do come on after we're done, they could actually watch, and oftentimes they'll watch it after the streaming.
Perfect.
So it's okay that they're not on here now. So anyway, as you all know, my name is Tisha Perry, owner broker of New Life Realty Group. We specialize in credit consulting. We also discuss different loan options, and we, discuss the market update to share this information to our customers and our future customers, so that you guys could be knowledgeable about what to expect when it's come down to buying, selling, or investing. And I have Ileana Bird here with Guild Mortgage, and she's going to discuss who she is and what she has to offer. We're going to discuss rates that are going on now and how they're going to impact your buying power for this new year, 2024.
Thank you, Tisha. It's good to be with y'all and excited to be here. Definitely. Again, Ileana Bird with Guild Mortgage. Today's rates, and most of you, and I feel like the news is everywhere. You can just open your phone and it takes you to Google and immediately tells you all the news. So today we have a special announcement from the Fed chair, Jerome Powell. He will be releasing his review about the interest rate and what he's going to do. We're not expecting a cut today based on our economy and how everything is trending, but he will give us an insight of what he's thinking about when we may have an interest rate. Possibly, most people are expecting one in the summer. So he will give us a guidance. So the release will be right around 1:30 Central Time. So if you guys, of course, is a press release around that time, we'll have more guidelines about what they are thinking. So for now, the markets are quiet, expecting for him to say, hey, this is what we are looking at, this is what we're seeing, but unfortunately not rate cut at this point. So the rates right now are setting steady, of course, for a conventional loan, 30-year, according to the average interest rate. And of course, you need to consult with your lender according to your specific credit score, purchase price, and debt to income. But the conventional 30-year fixed rate is at 7.11. Of course, if you want a little bit lower interest rate, you can get a 15-year conventional loan. Is looking at 6.62, 63, and then the FHA MBA is 6.62. Of course, we have 100% financing programs, and the rate right now with Alabama Housing, which is one of those, the rate is sitting at 6.875 for 100% financing. So, the best way to find out where you are is to give us a call or call your lender and have them dot some numbers for you. Of course, we can do that. That's what we're here for, to give you guidance, give you insight, show you the numbers. And of course, nowadays when I talk to clients, I ask them, hey, what are your plans for the house? How long are you planning to live there? Is this a 3-year, 10-year, forever home? That typically determines the type of program.
So what do you think is the score requirement as it relates to those individuals who are looking to acquire a loan, whether it be conventional, FHA, or 100% financing? Are they all the same scoring, or they have to?
They vary. So basically, for a government loan like VA, FHA, USDA, typically the government comes up with the interest rate, and the rate is a little bit lower than the conventional loan. The credit score can be is flexible, so they are not as tiered up as the conventional loan. So you can actually access a good rate even if your credit score is a little bit on the lower 600 side. You know, of course, the higher the credit score, the cheaper your rate will be. So
that's one of the questions a lot of people have is when they feel like, well, I want my score to be 800 or 750 before I purchase a home. That's going to help me with my rate. Does that really make a huge difference? Because I know I found out the hard way when I was buying a commercial property that I had 800 scores, but my rate was still up there because it was a commercial property.
Right. So most people, and you're absolutely right. Most people say, hey, I'm going to wait till my credit score is perfect to purchase a home. And I said, well, what actually determines the rate is, your credit score, but also the loan type. So if you're looking for a government loan like a VA, FHA, USDA loan, you might want to get a little bit of information from that lender to see the difference between a conventional and an FHA. So right now the difference is 6.625 FHA. If you go conventional, it's going to be 7.11. The difference may come in the specifics of each program and what you're going to do with them in the future, like mortgage insurance. For an FHA loan, the mortgage insurance stays with the property for the rest of the I guess the term of the loan. Whereas a conventional loan, once you reach your 20% equity, or you can waive that mortgage insurance. So it's all about a specific plan for you. So, my suggestion is not to wait till your credit score is perfect, because you may be missing out on purchasing a home, even if you choose to go with a 100% financing program, FHA, VA, USDA loan. Now, typically for 100% financing programs, the minimum credit score we require at Guild is 620, and that's for an FHA loan with a down payment assistance. So I keep my clients always informed about, hey, if you're looking for 100%, don't wait till it reaches, let's say, 680. If you can buy now, you can go ahead and start looking at property. Now it's all about giving the customer options and saying, hey, if you go conventional, if you go FHA, regular FHA, if you go 100%, here is the rate, here is the monthly payment. This is how much money you will need at closing. And definitely that gives them the opportunity to feel the payment, which is typically my second question. Hey, how long are you going to be in this property? And what is your ideal monthly payment? What do you have in mind in terms of, do you have a budget? How much is your rent? Because most people, and you probably will see that, they are used to making a payment closer to what they are paying in rent. So if a person is used to $1,000, $1,500, $1,700, typically they want a mortgage payment around the same numbers because they are used to that. So that's my second question. Hey, how much do you want the payment to be? And do you know what kind of property we're looking to purchase according to that payment, according to the interest rates now? So that way they get a little bit of more information up front, right? Another question that is good to ask, hey, are you currently leasing? When is your lease expiring? Because of course we don't want to go under contract if you still have 6 months of rental agreement out there. It's hard to get out of those rental agreements. So there are several moving pieces that need to be brought up, or that you need to be considering when you purchase a home. I'll say purchasing a home is not like you can do it all in 30 days. It's like, hey, let me get my feet wet. Let me understand what I'm doing. Let me understand my credit score and the type of programs that I can access, where the rates are trending, monthly payment, and also keep an eye on those savings.
So most importantly is mapping out a plan in advance.
Right.
So the average person, when you are looking to purchase a home, or even if you have to rent again, you don't wait until the same month that you have to move. So these are things you play out typically within 90 days in advance. But if you know you have credit challenges, it only makes sense to get those things fixed first. If you have any issues with your credit, you want to work on that way in advance so that you're not struggling to try to get your score up enough to qualify. Because nowadays, even to rent, there's going to be certain requirements to even rent. Credit and income plays a major role. So with that being said, if you know that you want to buy, your lease is going to be up later this year, you don't wait till the end of the year to decide to work on your credit or have savings. So this will be the time to go ahead and prepare for that so you'll be ready. And then also you can consult with a professional so that you can know what exactly you need to be working on specifically, unless you're very savvy and understanding of what credit is and how it works and what to expect as far as what scores needed. But don't take that for granted that scores is the only thing they're watching. They're going to be looking at everything that's on the report. Typically, they're going to be looking at some important things to determine if you qualify and able to pay the loan back. So your debt to income ratio will play a major role in what type of loan you can qualify for, as well as the loan amount that you approve for. And typically, like she was stating, that there's different type of loan. There's FHA, VA, and there's conventional. They all have different requirements. Now, for conventional loan, what's typically the score requirements on a conventional loan?
For a good rate, typically the conventional loan requires a 680 or better. Of course, the higher the better for conventional. It's just so it's a private loan, so typically you get a better rate, and also your mortgage insurance and your debt to income dictates how much on that mortgage insurance. So it does play a factor. So it's important to do your homework. Don't hesitate. Don't wait. Prepare. Nowadays, with as much information as we have time to prepare. You need to be talking to a lender that is willing to sit down with you or schedule a Zoom call or a phone call conversation, and is able to run numbers for you and prepare you. That's part of our job to show you how everything gets structured. And what we and other lenders look at is basically the same thing: your credit, payment history that goes with that credit, your income, to make sure that you have enough room to afford a payment or a house payment. And then third is the loan program and money in the bank. So credit, income, assets. It is my job to explain that to each one of you and to make sure that you guys feel comfortable with the process, understand it, and that you have options to, if you want to remain with me or you want to shop around, that you have enough knowledge and information to understand the difference and when a deal is a good deal or it's not.
Yeah.
Right.
Another thing we want to see, a lot of people want to know, is sometimes I was going to ask, sometimes you'll be talking and you want to remember what you're going to say. So I was thinking about when it comes down to buying, the closing costs, people always don't understand the difference between the closing costs and the actual down payment. Unless you get 100% financed directly through the bank, FHA, it does not provide down payment assistance. The down payment assistance comes from other sources. So I'd like for you to explain how down payment assistance work and the closing costs. Are all closing costs the same amount? What dictates the cost of closing costs?
All right. So your down payment is basically a portion of your purchase price. And each program has a minimum already dictated by the guidelines from basically the federal government. So going back to FHA, the minimum down payment is 3.5. Of course, we have Alabama Housing that provides a down payment loan to cover the 3.5% and maybe a little bit more to cover closing costs. They can let us borrow a second loan for 4%. So that covers a little bit towards closing costs. So the down payment is part of your purchase price. The closing cost is basically what it costs to close your loan. That includes the lender fees, the attorney fees, the county fees, your taxes, and your insurance. And of course, if we have points, that will be included there as well. So the closing costs vary according to the lender and according to the property. Hey, how much are the property taxes on this specific house. How much is the insurance? The insurance will depend a lot of times on your credit score. How many claims have you had? And how many traffic infractions you have had? So it varies according to your specific scenario. So that's why it's always good to, consider all factors. When you can come to us, it's going to be or when you purchase a house, it's a whole package that we need to be looking at, not isolated things, right? So that's why sometimes it's so hard to keep up with everything. It's like the lenders typically telling you, don't do this and don't do that, and don't open any credit, don't open any new lines of, because everything goes back to making sure that we keep you within that expenses. So I don't know if that answers the question. For FHA is 3.5%. For a first-time home buyer using a conventional loan is 3%. Of course, USDA and VA are 100% financing, and that's why those loans are so attractive. Your decision needs to be based, of course, on the down payment, the interest rate, the monthly payment, and also how much money you're going to need at closing.
Oftentimes I have people ask me about the USDA loan because they feel like because it's 100%, that's the best loan option. That may not necessarily be the best loan option. It really depends on where you live and if there's even opportunity to find a property that qualifies for USDA.
Right.
What do you feel is the typical requirements for someone to go USDA, and how does the buyer benefit by going USDA loan?
So USDA program is one of those that actually sounds so good when you hear about it. It's 100%, anybody can qualify, but we need to look at basically the bottom line, or the small print. So USDA loans are going to be the biggest requirement is that property needs to be in an eligible area. And for those of you that need to know that website, I'll be glad to share with everybody the website where you can type the address, and basically USDA tells you whether or not it qualifies. So it has to be basically in a rural area. And right now, what they consider in Central Alabama rural areas are really, really rural. We're talking about outside. It's probably more like Ditsville. Most of Wetumpka qualifies, and then
some parts of Watauga County.
Some parts of Watauga County and North Montgomery County.
And
South Montgomery County.
And I also service Georgia and Alabama. So Georgia clients often ask for that as well. But most of the people that reach out to me are not in the USDA territory. And a lot of those territories are so far out, depending on where you work, you want to also think about that. Unless your job is working from home or something, the commute can be very stressful, driving over an hour plus traffic. So depending on where you are in Georgia, that might not be the best option for you. There's plenty of loan options and programs available. That's why it's important to actually have the great scores. But here's the challenge we run into: income. So debt to income ratio plays a major role. The things you have in your name, what you have going in and what you have going out. So if an individual has a car payment, student loan debt, credit card payments, personal loans, collection debt, even medical bills are all added on your credit. The thing is, all of that is subtracted from your income. A percentage is subtracted from your income. That is your debt to income ratio, which then in turn impacts what you can qualify for. So oftentimes, if you're in a situation and you might need another vehicle, but you also want to buy a home this year, it's better to wait to buy your home first, because that allows for you to qualify for a nicer home and then buy your car afterwards. Because the car dealership, they factor that in, but it's not a big deal if you own a mortgage, because they already know most people are paying rent anyway. So that's not, your mortgage is not really a big issue. That long as you meet the credit requirements and income, you can get a car.
Right.
Buying a car is much simpler than purchasing a home. And I hear a lot of customers say, well, I bought a car. You can buy a car with a 500, 400 score and be slapped with a 29% interest rate. But you're not going to qualify for a mortgage and be slapped with a 29% interest rate. You just ain't going to qualify. So the way you qualify is manage your debt to income ratio and hold back on using the credit cards. You can't use a credit card today and then tomorrow you all of a sudden you want to just charge it up because you paid it off yesterday. It takes at least 30 days, if not more, for it to update on your credit profile before it reflects on a score. Even when you first make a payment, the score may not even reflect a major change right away. It can take anywhere from a month to 2 months for the score to actually update. Right. So And this is from me knowing from helping people with credit, also my own experience. And then depending on how much things you have on your credit, you can actually, once you pay things off or close accounts, it can drop your score. So we don't advise of closing any accounts. But of course, if you can afford to pay things off, it's better to pay things off for debt to income ratio, because we're running into a big issue that I've seen across the board. Income.
Right.
The cost of living is continuing to go up, but people income has not changed much because they're not knowledgeable about options to them. What I would tell anyone, if you know you want to purchase a home and you're not making that much, you got to seek other ways to get your income up. This is a big issue because the cost of living is not going to go backwards. Although we have issues with the rates and the market, even if the market crashed, as you all noticed, when I bought homes 20 years ago, those homes now are still way more than what I paid for. So that's obviously the purpose of buying a home, so that you can gain equity and establish something for the future. Correct. And that allows for you to be to have something you can will it, deed it, leave it behind, sell it, or pull equity out to invest. It's so many things that are involved with buying a home, and waiting is not necessarily the best thing for someone. Because here's what happens when the rates are low: we have bidding wars. Right. And then you're paying more for the house, because oftentimes if the seller has 3 or 4 or 5 offers, and I've seen cases even 20 offers. It was crazy in Georgia. I don't know Alabama. The most of my Alabama sellers may have experienced maybe 5 or 6 offers, and I don't know if anybody got 10.
I think 10, 11 was the norm.
Okay, you know? Back like when the rates were low, maybe somebody might have got 10 offers,
even more.
But I know I've heard cases where people have 20 or 30 offers. First off, that's just way out of, who's going to go through all that? Look at all those offers. At some point, you would think they would just stop it and say, let's go ahead and see what's the best offer after the first 5. But that ain't always the case. Some sellers want to say, okay, we'll give it a week's deadline. Before you know it, by the end of the week, we got 20 offers. When the rates drop, which they're not going to drop to 3% no time soon, matter of fact, it ain't going to happen right now. But if they do, within a few years from now, then you're back at square one, bidding wars, and now you're worried about even getting the house under contract. I had many buyers did not get a house under contract. 1 or 2 reasons what could cause you not to get a house under contract. You have no room for negotiation because the house that you're trying to get is right at the approval amount. Secondly, you don't have money for down payment or money for closing costs, so you're asking help from the seller. You're going through a program. Those individuals who have income that's high enough to be able to qualify for something decent and have savings and not trying to go through a program to get money are those who actually win. Meaning that you put yourself in a position where you don't have to really, if you get help, great. But if you don't get any assistance, you still have savings. You still have money for a rainy day, which allows for you to have better options when it comes down to your home buying. This is a big issue that we're running into. What have you noticed when that was going on during that time?
During that time, most people or most agents got to the point like, hey, if you are giving me a higher offer, are you able, in case the appraisal doesn't come at that purchase price, are your buyers able to come up with the difference, which means more money in the bank for those people buying? So definitely having savings, having extra money set aside in your checking savings account, retirement accounts, those matter. So, continue putting money set aside. Now, this is like Daisha was telling us, income. Nowadays, I really don't get worried so much about the credit because most people have decent credit scores. My biggest concern sometimes is the income. Consistent income that we can show that it's been there for and it's likely to continue. That's what a lender is doing. Hey, boring and predictable, that's what I call, and we don't want to hear those words, but that's what a lender is looking for. Boring and predictable, the income is consistent and likely to continue because that's what makes the monthly payment. So definitely, let's work on things, credit. Hey, how much can I qualify? And then if your qualification is not where you want it to be, you can, of course, pay down accounts. Don't pay them before. Talk to your lender about it. You can pay those at closing to create room for additional purchase. You can bring a cosigner. Or most of the time, I've done it before. Hey, you may want to consider about getting a higher paying job somewhere else where you can actually benefit. Because sometimes is that income that really needs to be increased so you can actually afford a little bit more house. Of course, that's kind of the ultimate suggestion because most people, hey, they want to be comfortable where they are at. But it's one of those things that you could do as well.
Yeah, and I tell anybody, if you've been on a job many years, you gain skills. Use those same skills to upgrade yourself. Unless they're giving you something that you can never get anywhere else, there's always room for opportunity. When I had to work for someone when I was younger, every time I changed jobs, I got a pay increase. I didn't go backwards.
That's right.
I mean, and if I wasn't happy or if I end up getting laid off or whatever, anytime I apply for something, I was always looking for more money. I'm always looking at more skill set because obviously if I've been on a job long enough, I've gained some knowledge. So now I can take that same knowledge and qualify for something else. And it's all about how you do your resume. And that's just a tad bit of information because we do have a lot of people from different backgrounds. Not everybody having a financial struggle. Not everybody have a situation with coming up with savings. But this is a big thing when we're trying to help our low income buyers. And the sad part is these investors are snatching up all the low income housing and renting them out. Well, these are nice homes that are renovated that some of our first time home buyers could benefit from, and they can end up owning some for their families. So this is the thing I sold. I love my investors because they help me to continue with my income. But at the same time, when I see these cute little homes being sold for 80 and 90,000, 3-bedroom, 2 full baths renovated, and it's really cute. And I'm like, oh, first time home buyer could really benefit from this. And they can have a nice home that they can live in until they can afford to get more. Problem is everybody wants to go higher. They want a $200,000 home when they really can't even afford it.
That's
so important. Investors are snatching up all the good deals, and then you're looking crazy. Like, well, I don't get a house, but it's because you're looking outside of the box. You're not thinking what you can get now to go ahead and solidify your home buying, and you're stuck. So it looks like we got frozen. That's Facebook sometimes for you. Look at that. Wait a minute now. Does look like we stuck. What don't happen here? Well, okay. So, yeah, I don't know. That was weird. Let me see. That's weird. It's frozen. I don't know what happened here because we just frozen on the screen. So I'm gonna look on my phone and see if it still has us on there.
Right. Well, and many times it's when you go purchase a home, and I've seen it, and I was there. Hey, remember at some point I was 20. And I wanted back in my day, I wanted a $200,000 house, which is now the $400,000 house.
Okay, we're back on here. You know what? I was trying to see what happened.
At that point, I didn't have the income to afford the $200 house. So guess what? You purchase something within your means. We purchased something that it was actually below our means, but we were able to live comfortably. Several years later, probably about 7 years later after we purchased, we were able to sell it for way more than what we bought it, And that difference gave me the opportunity to move into a conventional loan.
Get another house.
Right. And we had the 20% down to move into a bigger house with 20% down payment. So a lot of, and I can see that. I mean, Ileana, just find me that perfect little cute house that I can buy for less. Of course I want it, And it may take a little bit longer to find it, but the opportunity, is there. We definitely need to consider, hey, what's comfortable to me? What kind of payment can I make that is not going to be way out of my means, right?
Yeah, I mean, it just, like I say, everybody wants to get their dream the first time they purchase something. And at the end of the day, they're still renting and you still don't own anything. So I tell folks to solidify your cost of living, get you something nice. And unfortunately, there's not a lot of areas that still have $90,000 to $100,000 homes that are quality for the first time home buyers. They're not necessarily in the best neighborhoods, but there are some states that still have those opportunities. Time has passed. I've been doing real estate for 20 years now, and I've seen where the housing market has had its ups and downs. But one thing is certain, the cost of homes are always going up. The cost of rent is now higher. I have never paid $1,500, $2,000 for rent. Now, most of my buyers that are reaching out that are in Georgia are paying $1,500 to $2,000 for rent. Very few people are paying less. Those who are paying less are in neighborhoods or in areas that are not highly populated, or a lot of people are interested in moving in. And the same thing with Alabama. Yes, in Montgomery and other parts of Alabama, you might be able to find cheap rent. but the average person is still paying over $1,000 for quality.
Right.
And that's the known fact. Even here in Alabama, you can find a nice little apartment cheap somewhere for $700-$800.
That's true.
I mean, my daughter, she found a nice little apartment downtown, but they had been renovated for about $700. So there's opportunity there. But that ain't a whole lot of them.
Every day.
It ain't a whole lot of them. So you have to realize that, and you ain't gonna necessarily want to live in a 1-bedroom apartment. That was a 1-bedroom. So one bedroom for $700, that's great, because people are paying $1,000 for 1 bedroom in some places, and $2,000 in up north. So the main thing is getting stabilized and owning something that belongs to you.
That's right. So remember, when you if you're considering purchasing this year, go ahead and get started. Get your information ready. What we suggest is, hey, you don't have to purchase now, but having access to the information that you need and knowing what you can do, it is life changing. Because maybe you're not ready right now, but you may be ready, or you'll be able to get there in a couple of months.
You know what? Sheila asked about the rehab loan. I didn't even see that comment earlier. So that was about 12:33. We had started having some issues with lagging. Go ahead and explain, about the rehab loan. A lot of people are asking, if FHA, if they find a house that needs work, how does that impact? And I think what I might end up doing, Sheila, is restarting this live, because it seems like there's a lag. And that way, when I restart it, we're going to answer that question and do a summary on our next video. So I'm gonna actually close this out right now so that I can actually go ahead and start a fresh live that's not lagging since we had an issue. Facebook sometimes will do that, and there will be a delay. So I'm going to go ahead and answer that question in the next live. Thank you for tuning in, you guys.